Hey fools, it's John Rosevear, and today we're going to talk about General Motors. This past week, GM hosted what they call the Global Business Conference. This is an all-day event they host in Michigan. It's invite only, and it's Wall Street analysts get invited only. They show off some future vehicles. They talk in great depth about various parts of the business. I mean, they don't invite media, so your humble fool did not get to go, alas. But I did get to listen in live by phone and to see all the presentation slides, and I learned some things that are really important for GM shareholders to be thinking about. Here's one. It's a thing that comes up a lot. GM has a lot of cash. They had $24.3 billion at the end of the first quarter. And people ask why. Shouldn't they invest that or pay a dividend or pay back the feds or something with all that cash? The feds are another subject. They are paying back the feds. We'll talk about that another time. But right now, we want to talk about that cash. Chief Financial Officer Dan Ammon talked at some length at this conference about GM's cash. And, in his presentation, one of the big things he talked about was protecting what he calls GM's, and this is a quote, and it's something he says a lot, fortress balance sheet. GM's cash position isn't excessive, he argued. He showed a chart which shows that as a percentage of revenue, GM's cash position is about mid-pack among major automakers. The thing that some observers who say 24 million, what the heck do they need that for, miss is that automaking is a massively cash-intensive business. Developing a new vehicle requires a huge upfront investment. It can be $1 billion or more to develop a new vehicle from scratch. From everything from engineering and design and prototyping to buying the tooling for the assembly line, that can be a quarter of the cost right there, sometimes more. And this is something that happens over 2 to 3 years, these kinds of investments, sometimes longer. If you're used to thinking about high-tech companies where it's mostly intellectual capital and they can roll things out whenever, this is a very, very different kind of business. GM, like the other Detroit automakers, has gone through boom and bust cycles in the past because they would invest in new products when times were good and cut back when times were bad. Ford broke out of that cycle. They borrowed everything they could back in 2006, went into massive debt, raised over $20 billion in cash, and then used that money to fund a slew of new products right through the economic crisis. So they had all these great vehicles coming out in 2009, 2010, 2011, 2012, just as competitors like, most notably, GM, but also to some extent companies like Toyota were still trying to get their act together coming out of the recession. That completely turned Ford around. Great vehicles, gained market share, made a ton more money, and GM has learned their lesson from this. And the lesson is hold a big cash reserve so that you can continue investing in new product through the next downturn without going into massive debt. Ford is doing this. GM has learned this lesson too. That's what Ammon means by a fortress balance sheet. It's a castle that will protect the company against rough economic forces, against economic downturns. That's why they have all that cash. That's why GM shareholders should be happy about it. They need all that cash. Let them hold on to it. Thanks for listening, and fool on.